Good evening, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershoppingtraders.com. And this is the Elliott Wave update for the S&P 500 for Sunday, June 27th, 2021. Beginning here on the 4-hour chart, I just kind of want to go over a quick review of where we're at and what we're reaching, what point we're reaching. We are continuing to count a minor wave 5. And within that minor wave 5, we have completed what I have best counted as 4 waves of minute degree. So we're in that minute wave 5, which is subdivided, but we're in minute wave 5 to complete minor wave 5, intermediate wave 5, and a primary third wave. So again, we still remain on track to putting in the ultimate highs, which will complete a primary third wave and drop us into a primary fourth wave degree. Primary degree fourth wave, excuse me. And that is looking to be one of a fairly larger degree in terms of how far it's going to drop and how long it will take. And so this one is going to be, if we consider that the primary third wave has basically been in force since 2008, 2009, and that would put it into a very long-term advance. And so I would not suspect that our corrections are going to be a matter of a week or a couple of days, as we have previously seen in fourth waves. This one was from Tuesday in Globex to Sunday in Globex. So that was a fourth wave, but in terms it was in a minute degree, so it doesn't actually take that long. This is primary degree. So it's going to take, I think, at least a year to actually unwind and for the market to do all the consolidation it needs, et cetera, et cetera. So we're reaching fairly a little bit long-term high, at least for the near future. But again, it's a primary fourth wave, which leaves an additional primary fifth wave out there in the future to still happen. So it's not the penultimate, it's not the end. That's still out there, and that's still going to be coming. So plenty of good trading left for all types of traders. Right now, though, excuse me, we opened in Globex today. We ran up to a quick new high at 42.78. I think 25 actually, maybe even 79, but right in that area. And that's where I am labeling wave 3. The market kind of ticked above that 70.5 or 70.5% level at 42.69, 42.70. In fact, the first time it hit right on the nose, came back down, but then ran right back up. And that's okay. So if indeed this did complete this minute third wave, then we're going to be looking for a minute, excuse me, a minute fourth wave to a subminute fourth wave, excuse me. And so that's going to be retracement. And we're going to be looking for, I'm just going to put it on top of our upside, because our upside I want to keep in place. 78, there you go. So a 38% retracement, which is totally within the realm of reality, brings us back down to 42.50, 51. But in advance of that, we do have the 200-day moving average. We have the 20-day moving average down here at 68. We should find some support again at that 70.5% level. And it was resistance on the way up. It should provide some support on the way back down. I'm not looking for a lot, but I would be looking for it to come into the area of a corrective or fourth wave correction of one lesser degree. And that's going to be right here. So coming down to this level for 42.50, 42.52 fits very, very cleanly. And as would 42.58 for all that intent and purposes, because that's right, it is within the zone. So, you know, I think we got about a 20-point maybe drop. And whether it happens all in one day or whether it takes several days, who knows? We're going to let the market tell us that. But I do think we're going to get some continued downside. If it comes in extremely shallow and the rally picks up again and we start moving to new highs above that, could be one of two things. If we don't start to accelerate higher, and we kind of hang around up here and make additional new small highs, then it's just going to be the third wave wasn't complete where I thought, and we would move that over. But if it starts to break, we have stronger resistance at 42.8631. Then again, our next level will be 4,300, basically. And we have an ultimate kind of area up here at 42.30 that I'm feeling that should contain the fifth wave and complete the entire sequence. Now it could break there, and that's just going to not change that, we're reaching our ultimate top here from primary wave 3. It's going to make me go back and redo some of my Fibonacci and the count. Because the adjustments that I make to the count do not, the only thing that really are affecting is where it's going to end. So if I need to include more space to the upside, it does not necessarily change the Elliott wave count itself. It just maybe some of the internals. So I think we're still finishing a primary wave 3. We're still finishing a wave 5, and we're still finishing a minor wave 5. What may be adjusted is the minute inside that minor 5. That's what may get adjusted to provide additional upside, and also just to kind of clean up where the Fibonacci is coming. I did it in the NASDAQ today, so if you're listening to both, the same thing may happen here in the S&P, but right now we are not getting an indication that should be the case. So for tomorrow, I would look for continued downside. We have our downside limitations. It should not fall all that much. In fact, I would continue to think it's going to come in maybe down here at the 0.236 of wave 3. And that would be pretty shallow for the type of wave that we're looking for. But that's down at 42.61. And so that would be like a minimum. But our first one comes in at 69 and 61, and then 52 to 50. So that's really not all that huge. But these are areas I'm looking for before we get that final push up. Now that fifth wave, even though it's minute and subminute, these can subdivide. They can continue to subdivide as waves build up to the where they need to be, where they're going to go. So we'll let the market tell us. I continue to encourage people to trade accordingly intraday, even intra-minute, intra-hour. You're going to trade using your moving averages. Moving averages are very, very, very clean and good indicators of direction and the strength of the direction underway. So right now we remain in the position where the larger moving averages, the 200-day, the 50-day, the 20-day, are continuing to angle higher, and that keeps the pressure on the bulls rather than the bears. If it starts to break down below the 20, then I would start to lean more that the bears have at least control of that hour or that 15 minutes or 5 minutes, whatever time frame you're looking at. And then I still would then be looking for lower moving averages and also then Fibonacci support to come into play. So if I'm looking for this, it will continue to point the shorter time frames, that would be the 4-day and the 8-day, into a more negative position. You can start to see on these very small 30-minute, and if I go down again to the 15-minute, you're going to see how the moving averages are beginning to ever slightly curl. When they start to curl, see here we get a little bit more of what actually is now taking place. Let's follow it down to the 5-minute, open it up, take a look. Maybe. There you go. So you can see we've kind of got an A, B, and what do we have? A 1, 2, 3, 4, and this is a 5. So it could be winding itself up right now. But again, this is a 5-minute chart, so that allows for quite a bit in terms of what is actually forming. But right now, as if it's going to be really shallow, I can do A, B, and then a 1, a 2, a 3, a 4, and this is ending up being a 5. So then it's an ABC. Maybe it gets down to here, maybe it doesn't. If it doesn't, and we continue to rally, then it brings into question as to whether this final little push higher and to complete the third wave is done. That's all. So we continue to keep a very bullish tone to the market. And the stronger moves right now, I continue to believe will be to the upside. But tomorrow is another day, and we're going to wait, and that's where I'm going to leave all of this. And the next update will be Monday the 20th.